Hey everyone, so we're back for this third video. The first week we talked about the W-2, the parts of the W-2, where your wages and your tax on that came from. We talked about where your withholdings were, how those kind of came about, and we wrapped that into last week where we talked about your tax liability versus what you actually owed versus what your refund might be for the end of the year. What we briefly started talking about in the second video was what happens if your refund went down or you actually owed this year. A lot of Americans were in the position where they actually had a lower refund or owed money last year compared to 2 years ago because of the new tax law and how those withholdings hadn't changed enough. So I want to talk about a couple ways you can change that. So one way we briefly discussed last time was you could go to your payroll company or your payroll department and increase those withholdings. So say you actually owed money this year compared to last year and you wanted to wipe that out. What you could do is take that amount and divide it over the number of paychecks you have in the year. So I get paid twice a month, so there's 24 pay cycles I'll have. I could take that amount owed, divide it over 24, and ask my payroll department to increase my withholdings by that amount. It's just a simple way to get that paid in and not have to worry about it. Now, another way that you can look about it is if you have a lot of interest income or dividend income or maybe some pass-through income that comes from something outside your normal job that you don't want to increase your withholdings for because it's a little more sporadic. What you could look at are estimated payments. Now, they're a little more finicky. They're a little harder to do. You'd probably want to talk to a tax preparer about it, but essentially what you can do is every quarter or more frequently, you can pay into the IRS outside your withholdings and smooth that liability out so you're not looking at owing any money at the end of the year. There are some positives and negatives to that. If your income is a bit more sporadic and you only want to pay in as you're incurring that income, that's when estimated payments are a great option. However, the advantage of paying in on your W-2 is that it actually is deemed to be withheld periodically throughout the year. So you could have a large amount of withholdings in December, and the IRS will actually count that as being periodically withheld through the entire year. Whereas if you did that with estimated payments, you could actually incur penalties, tax penalties for that, for late payments. You'll get charged for the tax that you had owed and then an interest penalty for the amount of time that they felt you should have been paying that in and hadn't. So there's an advantage with the W-2 there that it can kind of smooth that out for you and get rid of some of those penalties. Now, the problem with that is if you're looking for your W-2 for your standard amount of income and it's not as frequent as your paycheck, your normal take-home pay would be less. So there are some things to think about there, but those are two really good options to look at. It's something that come November time, a lot of people start asking their tax preparers about and seeing where they're going to line up for next year and making estimated payments. But if you're a little more proactive, say go into the tax preparer now and say, here's what my paycheck looks like. I want to know how much I'll be projected to owe or get a refund for last year or this year. They'll be able to do that now for you so you can go to your payroll department and make those changes. It's just something to think about so that you're not surprised come April. I hope you like that. If you like that tip, take a like, put a comment if you have any questions, and feel free to connect. Thanks, guys.